Today's video is going to be a look at the week ahead. We do these on a weekly basis now. We'll have a quick recap of last week, which was chaotic. We were on our way to Cape Mountain. It looked like it was on the foresight. We were halfway up the mountain, and then Friday came and we rolled back down the mountain. But I'm still down the bottom. I'm looking straight up at the summit. What way is it going to go? What's the crack, everyone? Welcome back to Buy Wholesale. I hope, of course, you are all well. This just started off. Last week was wild. And as Dale Winton used to say on Supermarket Sweep, it was wild in the aisles, guys. It really was wild. I did have several videos throughout the week as there were so many moving parts to update you, so I'm not going to repeat too much, but we did have our Fed meeting, which was a bit of a damp squib. Nothing really happened. No certainty, which is what we need for the markets to remain more positive. We did have Apple's earnings, though, and let's talk about that. Wow. Just wow. Now, on the channel, I had been saying Apple's in a bubble. I still believe that. I still believe that's the case, and I still believe that Apple needs to pop for the S&P to pull back to the levels that we will identify as a crash, if that is where our destination is. So we can see the S&P finished 2.5% up on Friday, which was a great day for the S&P. Well done. So what does that mean for our moving averages? Well, since the 20th of January, it looks to be going down. We stayed on the moving average on the 21st. Come the 24th, we had a green candlestick, so it wasn't a full red underneath. We had the next day, which was a green candlestick. However, it was on a knife edge. Didn't know what way to go. Still not the full confirmation. The next day, we had our red candlestick. However, the wick touched the 200-day moving average. So again, that is not confirmation. This one is so close to it that it did look to be a red candlestick below the 200-day moving average, and it is ever so slightly. I mean, it is just off. But then we got our green candlestick here. I would still be in the camp that we are still unsure of what direction we're going to go. The S&P massively was driven on Friday by Apple, which we're not going to get into the earnings, but all I will say is wow. Now, I'm not surprised that they beat earnings, but to the magnitude that they have, I have to applaud it. Well done. Phenomenal gains, as usual, on Apple, which means now we are currently only 7% down from the highs. And if we were to say correction period, at the lows, we did have nearly 15% correction. So look, it could be done. That could be potentially the market's correction finished and everything went up. And it was a good day, a decent day across the board. Even if we look at my watch list on Friday, we can see Visa, 10%, huge gains, reported great earnings, MasterCard. Stocks that we were in, that we closed out because the momentum had gone, now all of a sudden are starting to look rather attractive again. Which is interesting. We'll talk more about picks at the end of the video. There is a lot of analysts out there that say the bull run will continue. There's a lot of people out there saying there's a hell of a lot more to come. You know my thoughts on it. I would like it just to pull back 25-30% S&P, get the pain over and done with, and we start buying. That being said, on Friday I did, and I put this into my Discord members, shout out to you all, against all charts, against everything that I talk about on the channel, I bought the Tesla dip. I started opening up my position again. For those that are new to the channel, I absolutely love Tesla. It is my favorite stock. Phenomenal things. 3 trillion market cap. You're going to 10x your money potentially between now and 2030. That is all in my theory on it. And if you look at it here, we can see from the all-time highs, we had about a 35% discount. I'd have me some of that. Thank you very much. We were dancing around the moving averages, so I felt we might get a bit of a bounce, but the main reason I bought here is because the RSIs touched here, and historically you would need to go back as far as the 12th of May for these dips, and you can see what happened there, channel right up. So I'm not saying this is going to go to the moon. They reported great earnings and tanked really hard for some bizarre reason, but everything here was more of a fundamental buy. I am not Ian Beale, but I have opened up a position. I bought 3 full shares at the price, and I've got an average price now of about 900, and I'm delighted with that. I started phasing in the money on the way down. Cannot believe Tesla was down as low as 795, and I did get to snipe half a share at that price, and I was delighted with that. Once the momentum comes, i.e. we get above our averages, and we know the momentum comes into it, I will of course leveraging and riding up. What I want to bring to your attention is the top 10 S&P 500 index stocks. A lot of people I put on my social medias, and I shout out to the socials, get me on Instagram, Twitter and all that. For the S&P to pull back a magnitude, you're going to need Apple to pop. Why? It's the biggest holding within the S&P of weight of just over 7%. But the FANG stocks, Teslas, Microsoft, stocks like that, they hold so much weight that it only really takes them to massively pull back, and that would bring the S&P down. So let's have a look at this. The 10 biggest stocks make up 28.5% of the index's market value. Let's just say 30% for round terms. So pretty much a third of the market is held. Now the weighting index here says 6.2, but it's actually 7%. So it has increased significantly since then. No surprise, it's your FANG stocks, your Microsoft, Alphabet, which is Google, your Teslas, Nvidia, Big, Buffett, Berkshire, and JP Morgan Chase. Okay, so these are the biggest holdings, accounting for 30%. Jim Cramer had come out and said he feels that there should be more pain before we can really properly rebound. Okay, so if we take in consideration at the lows, say the highs to the lows, which is about here, the S&P was roughly, say, 12% down. Significant pullbacks in the likes of Tesla and stuff, but generally speaking, the FANG stocks have held up relatively well compared to the other stocks, your growth stocks, your small market caps. So say they were to get into a crash territory, and for a crash territory, they need to fall below their averages, probably about 25 to 30% down to say it was a crash in those stocks. Apple hasn't got there, Amazon has near enough. We talked about Netflix falling off the side of a cliff the other day. We can see Google is about 17% down. You get what I'm trying to say here. Even if they all just got another shave off in and around 10%, that's going to shave off at least 3% of the S&P, which is probably going to bring us back to about sort of 12-13% of an average yip. Apple being propped right up 6%, if that was the pullback, sort of 25 further percent to be in that correction range of about 30% like the other FANG stocks. 30% of a stock that weighs 7% is going to automatically be a minimum of another further 3% that will be took off that. So you wouldn't be far fighting yourself down over 15, 16, 17% just by those top 10 stocks pulling back, and that is it. And if there's any movement within the upper ones to pull back further, you can see how you would quickly find yourself in a correction period of 25 to 30%.
No feeling down there now.
How is your ass?
My arse has got no latch.
That might bring some comfort to some people in terms of, I can't take the pain no more. The growth stocks maybe are starting to find some sort of said bottom, in my opinion, because it can't really fall much more. For the S&P to fall to these crash levels, that is kind of the scenario that is going to have to play out. So you can see why my logic was to short Apple. I'm still holding my short in them and my S&P. However, if my assumptions are incorrect, and they very well could be. I mean, I've openly said I am betting against Apple when all it has done is just continually to go up. And I did say they would have good earnings. These earnings are phenomenal though, and the market's reacted very positively. So that's just something to think about there. I'm still going to hold my shorts just to see what way the next week plays out. I will, of course, cut my losses in and around the 10% region, as I always do. That's just the rule. So far, I'm down about 5% on my Tesla or Apple short. My S&P short, I am leveraged up on that. I am down about 8%, but I'll give that a wee bit more room and just to see what way it goes. It's an insurance policy. At the end of the day, the majority of my portfolio is all long positions. So if the short positions get taken out, it doesn't matter. My portfolio is still going up in the right direction. It really was an insurance policy. Quick look at the week ahead. We have the Bank of England rate meeting on Thursday. All eyes will be on that. We're not going to go into the details. Let's just see what way it goes. They said they're not putting up rates there, sort of behind where the actual feeling is compared to America. We have the jobs reports coming out on Friday, which is going to be good to have an idea of how the payroll and stuff's going there. Keep an eye out for that. We have Google's Q4 results, which is, and if you go back up here, you can see quite a lot of people coming in, 9% short on Google, so people maybe are expecting them to pull back. We will see. Personally speaking, I'm not going to touch anymore. I'm happy enough with my Apple gaping, but I will capture some of this if the likes of Amazon and Alphabet pull back. That will bring down the S&P. They report Tuesday after the bell. Some UK stocks, Vodafone, not too bothered about it. Then BT's group. Amazon Q4 results then is the other big boy to report, and that'll be on Thursday after the bell. And then Friday, as we talked about, they have their job earnings reports. That's the sort of the milestones that are coming out the week ahead. I will, of course, keep all the Discord members up to date with any other progress and the heat maps and all the stuff that we do. In terms of stocks to pick this week, guys, I'm keeping my short positions, keeping a close eye on the likes of the Visa and the MasterCard. These things have shown to be in the right area now of reversal. However, they only got there following a huge 10% rise on Friday, which is encouraging. Of course, but I'd be treading carefully, not too sure if I would be opening up any positions. Let's just get earnings week out of the way. There's no need to rush this. 2 weeks of the year, we can kind of hold back and keep our cash pile ready to go. If Tesla falls down more, which it may do, it doesn't look particularly great on the charts, I'm buying more. Simple as that, buying more on fundamental. If it goes down below sort of 790, I will buy another half a share, and I'm just phasing in the money, Ian Beale style. Build up a great position, holding that baby long. That is going to ride to the moon, no doubt about it. Yeah, that's the video. Hope you found it informative. If you do like it, please like, subscribe. Help me grow the channel, appreciate that. Check out the trading course as well if you want to learn how to trade in and out of these things, so you understand what I'm talking about when I say we ride the momentum. The momentum is very much only in the likes of your oil, your dollar, your commodities potentially, and the likes of well, potentially MasterCard now, but realistically it's only your short positions. So do trade carefully, keep an eye out on things. We'll see what way the week goes, and I'll be back very soon. Peace.
Yeah. Coincidence. Yeah. Coincidence. Something that happens by chance, I think not.